So I'm here with Mike Maloney, who is the Rich Dad Advisor. His book is Guide to Investing in Gold and Silver. And again, we're talking about the unfair advantage of financial education gives you, infinite returns, how to print your own money. So before I bring in Mike on, I want to recap this whole thing. Is today a lot of people are being killed financially. But if you're strong with financial education, you're pretty doing well. The thing I like about business is you have many tax advantages on your side. The second, with real estate, we use debt to get rich. Okay. Third, with paper or commodities, is liquidity. You can get in and out very quickly with paper, which is a strength and its weakness. And commodities, the reason I like commodities is for the word called inflation. So one of the reasons I don't need a retirement plan is because every month, because I have infinite returns, I get a check from here. My real estate, I get a check from here. And paper assets, I get a check from there. So I don't need to save much money because these assets, I'm not planning on selling. I will sell occasionally. But every month I get his checks, and they're infinite returns. Now, what I do that's different than some people, since my problem is kind of too much cash all the time, that's when I buy commodities like gold, oil, and silver, simply because I suspect with all the money they're printing, there's going to be inflation as they attempt to prevent deflation over here. Yeah. So my strategy is a little bit different than most people because, again, I don't need a retirement plan. I have lots of cash flow, and rather than holding cash, or the US dollar specifically, I'd rather hold gold and silver, right?
Yes. You know, one of the things about investing is you want as much predictability as possible. And we sort of know where our government is heading. You know what Ben Bernanke is going to do. You know what the Obama administration is going to do. They've already made it very clear. They're going to try and save the economy at the expense of the dollar. They are willing to sacrifice the dollar.
Yeah, it's what is called is a weak dollar or weak currency policy. The weaker our dollar gets, then the Japanese have to weaken the yen, and the Europeans have to weaken the euro, and the British have to weaken the pound, because the weaker dollar exports more, if you understand that. So it punishes the people in America with a weak dollar because that causes inflation. Yes. Because the dollar can't buy as much.
Correct. One of the things that's going on right now, we're creating currency at an amazing rate.
Every central bank in the world, for the first time, is printing.
Yes.
They have to. They have to.
If they don't keep up with the printing that the U.S. government is doing, their exports to the United States stop, and their economies slow. Yes. So every time we print, they print.
And it's even the Swiss. You know, I was having a drink at the bar in New York 2 nights ago, and I won't mention the name of the bank, name of the person, but he's way up there. He says UBS, you know, the UBS bank, and Credit Suisse, their debt, their default is 10 times bigger than the whole GDP of Switzerland. I mean, the amount this credit bubble is collapsing on them, it is 10 times bigger the entire government, the GDP, the gross domestic product of the entire nation of Switzerland. Wow. So that's how big the bubble is, and that's they're printing. They try and keep this thing up rather than deflation, which they're terrified.
We could have a short-term deflation, but ultimately, it's my belief that there is just no way that this turns out to be permanent deflationary. Ben Bernanke's greatest fear is deflation. What I'm going to show you is something called base money. Base money is the amount of cash in circulation, so it's paper dollars, and then deposits that the commercial banks have at the Federal Reserve, which are all redeemable in paper dollars. So basically, it's a measurement of how many paper dollars exist. And the data that we've got starts back in about 1918 with the Federal Reserve, and it goes along like this, and we're like right up here. Then the value of all the, so this is the value of all the paper dollars that exist, the total value.
And you're saying this starts in 1918 or
1918? Well, the Fed started in 1913, right. But the data starts in 1918.
Okay.
But the value of all the gold held at the Treasury, take the number of ounces of gold times whatever the price of gold is at the time, was down here. And then in 1934, they unpegged the dollar from gold, And the value of the dollar sank from 1/20th of an ounce of gold to 1/35th. So in other words, the price of gold rose. It wasn't gold going up, it was the dollar going down. But what's interesting is the will of the public and the free markets. They unpegged the dollar. The free markets bid the price of gold up until the value of the gold at the Treasury matched every dollar, the value of all the dollars printed from George Washington to Roosevelt. Then we go out to 1980, and gold was at 35 bucks an ounce.
Okay, so this date was 1934?
Yeah, 1934. This is actually 71 here.
1971.
That's
when Nixon took us off the gold standard.
Nixon took us off the gold standard in August of 1971. And gold, the will of the public and the free markets, again, gold rose and then did a little thing like that. And then for about 3 months, actually for over a year, we could have gone back on the gold standard. Gold's price, the number of ounces at the Treasury times the new price, once it was over about 500 bucks an ounce, there was enough gold at the Treasury to pay out against every single dollar printed from George Washington to Jimmy Carter.
So
that's 1980.
1980, right? And that's when gold hit around 850 and silver hit about 50.
Right, yeah. And now they're printing like crazy, but gold was 850 here, and then it went down to like 250, and now it's back up to about 950. So it's a little bit higher than it was here.
So this is 2009 where we are today.
Yeah, 2009. Now, here comes the big news. In September of 2008, they bailed out Fannie Mae and Freddie Mac, the government-sponsored entities that backed all of these mortgage-backed securities. They purchased them from the banks, they purchased the mortgages, and then they were bundled up and sold. When they bailed them out, the Federal Reserve wrote a check, and it created another, it took 200 years to go from $0 to 825 billion, 825. And then they printed another 900 billion in September of last year. And so this was 1.8 trillion roughly. And then in March, they announced another 1.2 trillion. So now we're at 3 trillion paper dollars that exist. This is in less than a year, folks. We've gone, it's almost 4 times, it's like 3.7 times the amount of paper currency that exists on this planet, paper dollars, than existed before September 9th of 2008. Now, for gold, for history to repeat, and for gold to do the same thing that it did back in 1934, in 1980, and literally hundreds of times around this planet, going all the way back to the first great inflation in Athens in 407 BC, gold would have to rise to a price of $15,000 an ounce to cover the number of paper dollars that exist today.
And that's just, is that just U.S. or is it all?
That's just U.S. And here's the big catch here. A lot of people are worried about gold being confiscated or something, the U.S. government banning private ownership of gold. Well, the problem is 70% of all the world's currency is U.S. dollars. More than half of those dollars are outside the United States. If today Obama announced that they were going to ban private ownership of gold and make it illegal once again for Americans to own, I believe that the rest of the world would get rid of dollars and buy gold. They'd go, oh my God, there's something wrong with the dollar. I better get out of dollars and buy gold. The government would get exactly the opposite of what they would be trying to achieve. So the government really is in a box. They can't make gold ownership illegal again, and they have no control over it. Yeah, and they can't stop this. If they stop it, the economy is going to collapse. Yeah.
So basically, that's where we're at. It goes back again to the start of the Federal Reserve, 1913, 1971, 1980, and this is where we are today. Mm-hmm. I think another thing that's interesting was that 1971 was an interesting date because by 1980, the bailouts were in the millions.
Yes.
By 1990, the bailouts were in the billions. And by 2009, it's now in the trillions.
And probably headed toward quadrillions soon.
So as you know, that, as we've said in Conspiracy of the Rich, every fiat currency, everything that's been printed, ultimately goes to its true value, which is 0. So that's why gold and silver may be the biggest infinite return of it all.
Yes, if the paper dollar goes to zero, that means you got infinite returns.
Infinite returns. And so there's so many ways you can make money, but again, it's the unfair advantage of having some degree of financial education. And this is the reason we wrote Conspiracy of the Rich, is because this is not her opinion. These are facts right now, and I think we're out of control. And as you read in Conspiracy of the Rich, there's been two kinds of depressions. One was a deflationary one, which was the U.S., and the second was an inflationary one, which was Germany. Mm-hmm. And I think we're going to inflation.
Yes, and either way, though, what was interesting, this was a deflationary period, yet you had massive gains in the purchasing power of gold. This was an inflationary period. So I think we're in for some amazing times ahead, and you can either be afraid of it or you can put yourself on the right side of things, and this can be the greatest opportunity in your lifetime.
Right. This could be the biggest transfer of wealth ever.
Yes.
This is Mike Maloney's book, Guide to Investing in Gold and Silver. And thank you for being a Rich Dad Advisor.
Thank you.
Thank you for being part of Conspiracy of the Rich.